Welcome back, and joining me for a look at the weekend day in markets is Jason Horner from Steyn Capital Management. Thank you so much for your time, Jason. For a moment there when I woke up and I saw the JSE, because it's been a very interesting thing to watch with the record highs that we have had this week, I thought that at some point the JSE was going to give up some of its gains, but seeming that it is still in the red, still firing on, although maybe not as much as we had seen it yesterday and the day before. But just talk to me about, the steam that's driven this momentum on the local bourse.
Yeah, sure thing, Zanati. Thanks for having me. It's been a very interesting week. Obviously, being with Heritage Day, things were a bit slow on Monday on the JSE, as most people were on leave. But yes, everything started happening on Tuesday while we were all enjoying our Heritage Day, as the PBOC came out with an easing package which beat market expectations. So in China, it's well known that deflation, as well as struggling to reach the GDP 5% growth target, has been problematic. And historically, or more recently, we've seen a more incremental approach to easing coming out of the PBOC. However, what we saw now is, I wouldn't say unprecedented, but it was certainly market beating from an expectations point of view. So we've seen a whole range of measures, from stock market support to the tune of $114 billion. We've seen cuts in interest rates to try and shore up the housing market, as well as some more policy rate cuts on the shorter end of the curve as well. And that really got markets going on Wednesday and overnight into Thursday. And then on Thursday, the Politburo meeting happened, and they came out very forcefully looking at shoring up housing, monetary policy, with some really strong wording, suggesting that they're going to be conducting significant rate cuts, as well as looking at fiscal easing, which from a China perspective, that's really what everyone has been waiting for. And we've seen this massive positive reaction, particularly amongst resources and those companies with links to China. And we've seen that on the local bourse as well. We've seen resources running really well, and it's kind of continued through the week. And yes, as you mentioned, things have taken a relative breather today versus the last 2 days of trade.
It's actually quite interesting because, for a long time, the markets had expected a bazooka-style stimulus. It seems that is what they got. And it's actually quite interesting also to see that although we are still getting quite disappointing economic data out of China, including industrial profits that we got today, it seems that markets are looking over that. Jason, let's go into some of the company news that came out with numbers today. Momentum coming out with annual results there. Good profits, but seeming that the markets haven't really reacted positively to that. At some point, I think the share price was down more than 3%. Just talk to me about those numbers, but also what you're making of the market's reaction today.
Yeah, sure thing. I think the numbers were relatively well guided. Headline earnings per share coming in the middle of the range from what they guided previously with the trading statement. However, versus market expectations, probably about 4% light on that side. And just a couple of things to note. Yes, broadly good performance. However, just a couple issues surrounding new business versus the value of new business, margins coming under pressure. The group alluding to looking at cost pressures that are existing in the base, which they need to look at, as well as increasing losses out of India, as there's been a delayed increase in prices to compensate for high expense claims there as well, which has been impacting performance overall, which the market hasn't really enjoyed that much. So yes, to your point, we've had a negative reaction to that announcement.
All right. Well, talk about negative. We did get negative numbers coming out of Trelledo. Except for the top line. No, actually, I'm lying. We did get negative numbers coming out of the domestic market, but overall those numbers, we did have revenue there rising 12.6%. But of course, we did also have the bottom line surging more than 100%, but no dividend declared there by Trellidor. What did you make of those numbers, and I guess also just the divergence between the domestic market and the international market?
Yeah, sure. I think just to set the scene and provide some context, I mean, this is a business that has had quite a tough time in recent years.
Yeah.
I think if we look on the domestic side, it's been tough with low levels of disposable income. Africa, which is also a significant chunk of their business, has had a challenge on the FX side as Africa has grappled with the FX liquidity issues. And then at the same time, input prices as well have taken a toll on the business in recent times. So we are cycling off a low base.
Yeah.
But yes, overall cash flow was much improved this year, and so they've been able to use that to reduce debt. But it is still high. But yes, it is a key focus of the business going forward.
All right. Well, Jason, we are out of time, so let's get to your stock pick for today. What are you choosing?
Sure thing. Our stock pick is Southern Sun Hotels. SSU is the ticker. It's the largest operator in the country, owning around 20% of domestic hotel rooms. Despite rallying quite strongly this year to date, it continues to trade cheaply, generating significant amounts of free cash. The CEO has been, we believe, has been quite savvy. They've bought back around 10% of the shares over the last year or so, and they are also clearly seeing a lot of value. And we're also seeing tourism recovery as well, continuing still at about 80% of pre-COVID levels if we're looking at airline capacity and air travel prices. So yeah, very, very interesting story, kind of a good positive view on SA tourism as well, which we think is going to continue to improve in the short to medium term.
All right. Well, thank you so much for your time and for your analysis on what is moving investor money today, Jason. That was Jason Horn from Steyn Capital Management.